Hello, and welcome to this live stream by BitLearn. My name is Han Tan. I'm the Chief Market Analyst here. And happy Singles Day for those of you who are perhaps celebrating, perhaps not so happy today, but at least you can console yourself with some really exciting market moves that we've been covering here on this daily live stream. But not just that, perhaps you're also taking advantage of some of those sales that you may be finding online. Okay. All right, so today we've got a lot to cover. Thank you so much for joining us here on this live stream. Again, we're going to keep you up to date on what's happening across the markets on a daily basis. But for today, let's go ahead and pull up the agenda for you here. We're going to talk about how high gold could potentially go this week. You know that not just in the description that we have on YouTube and on X, that we are going to be talking about gold, but it's certainly that something that we have been keeping an eye on a lot, not just in the past few days since we started this live stream, but also, let's be honest, for most of this year, right? It's rebounding quite nicely. So we'll talk more about what is the expected range. And of course, we'll take a quick recap at some of the opportunities that we have highlighted so far. All right. So I know that we have only had a few days of this live stream, but already so much has happened. Of course, developments with the potential end to the US government shutdown. So yeah, stuff to look out for. Okay, so let's get right to it. Real quick, let's look at gold prices here. Let's maximize this chart that we can see on Bybit. So again, if you had been attending these live stream, if not, feel free to go and check it. It's on the history for X and also YouTube. On YouTube in particular, make sure you click on the live tab and you can see all of our past daily market updates. So previously, we had set that target for that 21-day moving average, right? So it was hitting it right nicely. And then after yesterday's live stream, it kept surging and now testing that 4,150 resistance level. If you look at just a couple of weeks ago, right, towards the end of October, you look at October 22nd, 23rd, 24th, you see these rejections around that upper wick on these daily candlesticks. So all that means, for those of you who are new looking at charts, each of these blocks or candlesticks marks how gold prices, this is the chart for gold, how they performed in that particular day. Okay, you can read up more about candlesticks. You can Google it or just ask ChatGPT. But you notice this resistance action that we've seen in the later part of October. Also, a little bit of that on October 14th, right? So, no surprise that we are seeing a bit of resistance there as well. Again, as a reminder, when I use the word resistance, think of a ceiling. That's when prices kind of usually hit around that region and then come back down. That's resistance, think ceiling, as opposed to a floor or support. Again, same concept applies. Prices tends to hit that support level or that floor and then bounce right back up, just like we saw with the 3925 region. Okay, so obviously big gains here. Now, why is gold climbing? We've got several reasons. Number one, you've got this weaker dollar. Why is the US dollar weakening right now? Well, because we had some jobs data, not the official headline non-farm payrolls for you seasoned market watchers, but this is data from the ADP, some more frequent data, once again showing a weakening jobs market in the world's largest economy. So that tells investors and traders that, hey, maybe when the US Federal Reserve, aka the Fed, which is the world's most important central bank, they've got a meeting coming up in mid-December. If the jobs market in the US keeps weakening, the Fed may have to come in and cut interest rates again, right, to offer support for the US economy, in particular the US jobs market. Okay, so it's that kind of storyline that's coming out. That's why you've got these gains for gold prices on the back of the weaker dollar. And of course, something that we had mentioned yesterday, You've got developments surrounding the U.S. government shutdown. There's now movements on Capitol Hill. The Senate has passed a bill or a measure. Now it's over to the House. So all that means we could see soon an end to the U.S. government shutdown, which already is the longest in U.S. history, right? So those are the charts for you now. If you look at the green and pinkish line here, so these are some numbers that we have that I got from the Bloomberg model forecast, and I'll show you that actual model, what it looks like in just a bit. But this is the forecast for 1 week's price action. So basically between now and the 18th of November, right? Based off of current prices. So between 4256 and 4040 to the downside, that's the forecasted trading range, the likely trading range for gold prices between now and November 18th. Okay, so something to keep an eye on. Again, to be very clear, none of this is trading advice. Watch the sticker, do your own research. And of course, the model is not directional. It gives both an upside limit and a potential downside limit as well. It's just a guide, right? Based on what's likelier. I think it's a 1 standard deviation on the past trading prices for gold. All right, so here's what it actually looks like. I'm going to pull it up on the screen here so you can see. Yeah, so there you have it. 1 week, 4040 to 4256. Again, a 73.5% probability that it stays within this range for the next 1 week period. Now, of course, this model is not able to predict when that shutdown will end or what, if President Trump or what he might do, right? So this is just kind of based on not just analyst estimates, but also what has happened in the past, the variations or the range that gold typically, right? That's the keyword, that typically adheres to. So that's the kind of range that I expect for the next 1 week. So if you look further down, right, you might have to wait, go back to gold prices with the record high just shy of 4,400, right? So if you're looking for 4,400, that might have to be a month from now, between now and the first couple of weeks of December. But of course, we know the markets are not predictable like that, right? So much can happen, anything can happen, especially with not just political risk from the US, what's happening on the world stage, and also what's happening with ETF flows, and as well as you, right? Retail traders and investors who are fans of gold. Here's a potential guide to help you guide you along in the coming week and month, and what if you can go further out, you got plenty of different time horizons that you can follow along here, okay? So that's gold prices. And look, I think coming back to this chart here, so, for immediate purposes, we got to look for that daily close above that 4150 region, right? Perhaps going up to as high as 42 right there. 4180. So 4150, 4180, that's going to be this nice little resistance region here. If spot gold can meaningfully break past that, right, then we could be exploring further upside, potentially 4256, if the model based on current gold prices actually stands true. Okay, all right, so that's a goal for you. Look, and folks, if you got any questions, feel free to drop them in the chat. You can post them on YouTube. I'm keeping an eye on that. Also on X, for those of you who viewing there, right? So feel free to just ask questions that you may have on gold, or we're going to look at some other assets in a bit, or if you've got questions about just what's happening broadly in the markets, or maybe a chart that you want me to pull up for you, just feel free to give me a shout. Okay, so that's gold. We'll come back to the slides here real quick. So I just want a quick reminder here on what we had shared even from last week. So again, don't take my word for it. Make sure that you can make sure you go ahead and also look at the previous live streams that we've had so far. Okay, so this was the setup that we had from, again, November 6th, right? And we've been revisiting it every day since. So gold prices there, already hit the 21-day simple moving average target and even surpassed it. And I've given you the potential new targets based on the Bloomberg model that I just shared with you. But I want to quickly draw attention to Bitcoin, right? So, again, we did come very, very close. And you tell me whether a 0.3% gap between the price and the target, whether that constitutes a win. At least in my book, I think it's close enough, but hey, you be the judge, right? So we'll look at the Bitcoin chart here very quickly. Coming over to this side, once my screen actually loads up. Here you go, right? So if you can see, hope you guys can see this. Yeah, so this is Bitcoin, which the code is BTC USDT for spot products on Bybit. And you can always find them just by hovering over this icon over here on bybit.com and just type in your desired asset, right? But although Bitcoin has been stuck in this downtrend. Downtrend in simple terms just meaning lower highs and lower lows, right? So prices are in this downtrend, but we came very, very close. And you see that tiny little gap right there, right? If I extended this arrow, it would basically just fill that gap. That's how small it is. So less than 0.3% away from the target before, again, prices just came tumbling down, right? So I think overall in the crypto space, look, we already know about the October that didn't happen, right? It was a very dramatic month of October for crypto markets, but sentiment overall based on different factors that we look at, sentiment surrounding the crypto sector is still weak. So hence while you see the likes of gold still marching on higher, and later we'll show you another asset that just hit a new record high today, and it's another asset that we are also highlighted in our very first live stream on November 6th as well. So while these other asset classes are moving higher, the likes of Bitcoin and other cryptos, altcoins, are just struggling to really hang on to those gains, right? So came close, less than 0.3% to the target before tumbling back down. If nothing else, at 106,000 big round number, which often acts as a support or resistance. It has a psychological impact on traders and investors. Once again, proving that that this has been a resistance at least over the past couple of days, right? Still, if you are being generous, feel free to give me that win in that, it did come very, very close to that 21-day simple moving average target, okay? And just a quick revisit of some of the charts that I mentioned earlier, again, the 100,000 psychological level, again, is absolutely crucial. In other words, Bitcoin really has to consistently stay above 100,000, and if possible, even strive for higher ground before we can say that the worst is over. Right now, of course, bears would love this with the different products that are available on Bybit. Traders can potentially take advantage of falling prices as well. You just got to go short, right? But again, this is not advice saying that what's happening in crypto markets right now, sentiment is weak. Bitcoin clearly stuck in a downtrend. A lot more to do, right? A lot more to conquer, not just the 21-day simple moving average, but this upper downward trend line, this purple line here, as another potential resistance. Then these cycle highs around the 116,000 level, right? Before, potentially even thinking about going back to revisit its all-time high that was registered just literally almost a month ago, right? October 6th, the intraday high at 126,195.5 there on Bybit spots pricing there. Okay, so yeah, still early days, but at least, hey, we saw a fruition of the short-term trading setup that we had highlighted in recent days. So, for me personally, obviously it's due time to be updating the Bitcoin chart. We've already updated the gold one that I showed earlier. Okay, so yeah, coming back to the slides here. And look, actually, before we go any further here, folks, just want a quick reminder that, hey, again, I've been saying this many, many times. Here at Bybit Learn, we think that that learning is reward in and of itself. The more information you take on, you can hopefully make more informed decisions, or at least help guide your journeys through the global financial markets, no matter the asset, right? The more you're learning, the more, hopefully, the better decisions that you can make. Having said that, we totally understand that we try to make it that bit sweeter. So, just a quick reminder that you can scan this QR code to potentially get your chance at your share of 25,000 USDT in rewards and more, right? Because when you scan that QR code, you will land onto a page on the Bybit website, and within that page, you've got a lot more tasks that you could actually accomplish to try and get even more rewards. That's why we say your share of 25,000 USDT and potentially more rewards. Okay, learn more, earn more, as we say. Okay, now for those of you on X, you can find the same QR code sprinkled all across our feed. So make sure you check out the Bybit Learn X account. Okay. Or for those on YouTube, you can just click on the link in the description below, and it will take you to the same page as well, and potentially put you in the running for some of those really, really nice goodies over there. Okay. Let me see. So yeah, this one, well, we'll come back to this in just a bit. Real quick, I mentioned this earlier, so make sure you look for the Bybit Learn official YouTube channel, right? So that's at Bybit Learn official. Click on the live tab, and you can see, and hold me accountable, right? Guys, we are trying to do this in the name of transparency and education. So, hold me accountable to the stuff that I've said in the previous live stream. So feel free to check those out as well. Okay, now let's look at some other stuff, some pretty exciting stuff that, again, we had highlighted previously. So let's go back. You may have seen this chart here. Okay, this is something that we are updating today. GBP USD, a very, very popular forex pair that is traded not just by retail traders, but of course professionals as well, and exporters, the works, right? It is one of the most traded, or at least most popular and recognizable forex pairs out there in the world. Well, today, at least as of this afternoon, the British pound was the weakest G10 currency against the US dollar. All right, don't believe me? Well, let's hold me accountable here. Let's try and pull up some live data. At least it was the case this afternoon, and I posted a screenshot as such there on X. Well, while the British pound has actually erased a lot of those declines here, but still, as it stands, the British pound, out of all its G10 peers against the US dollar, just for the past 24-hour period here, or actually since the closing price on yesterday's session for FX markets, it is the worst performing. Right? Let me try and pull up that tweet that I actually posted earlier that shows. I believe it's tell you what, it's going to take too much time, but I think you can find it on X. Just look for @BybitLearn, right? I think click on the November 6th one, right? But going back to the chart here, right? So once again, we had posed the question whether or not we could see a low below 130, and even from last week, we already said, I already shown you based on the Bloomberg model, the range was still about 130 for the support or floor, and clearly it's now it's been moving higher in recent sessions, right? Let me try and zoom in on this a little bit closer so that you can see. Right, that's the 130 level for GBP USD plus. That's the code for this FX pair on Bybit, right? So yeah, you can see that that tail wick here. It's clearly got a long one. That means prices have come down as far as to the end of that red line there before bouncing back up. So as I mentioned at the start of this live stream, right, clearly there is a weaker dollar environment right now based on expectations for what the Fed could do at its December meeting. With that in mind, I'll show you some live updates here. So we had spoken about the economic data on the UK front to look out for, and we'll give you an update on that in just a bit. But remember, for markets, FX markets, even stock markets, various asset classes, cryptos as well, although less likely these days, the central banks or market expectations about what these central banks, the Federal Reserve, the Bank of England, right, the European Central Bank, etc., all these major central banks, and the market try and predict what they could do, and their anticipation or their shifting expectations also moves markets, right? So in other words, make sure that as you are studying along and watching financial markets, keep a very close eye on these central banks. So looking at the Federal Reserve, again, they've got their decision due on December 10th. And right now, markets are anticipating about 70% chance that the Federal Reserve will cut interest rates by 25 basis points at that meeting. So you put that into context, right now it's 70%. These are live odds here. If you go back to, say, a day ago, it was probably slightly lower. There we go, about 63% or 62.6% or so. Okay, so that's for the Fed, which obviously influences the dollar side of the story, right? GBP USD, right? It's two currency pairs, GBP on the pound side, on the UK side, USD on the dollar side. And then if you look in contrast to what the expectations are for the Bank of England, which is the UK central bank, right now there's an 86% chance that the Bank of England might cut interest rates by 25 basis points in the UK on December 18th. So remember, about 87% chance there, right? Which is a big jump compared to what we just saw the day prior, about 72%. Okay, so because of those higher expectations for interest rates to go lower, right, weaker currency. So the thought of interest rates moving down in a country often leads to its currency weakening, and vice versa. The thought of interest rates going higher in a country, and then markets tend to buy up that currency. Okay, all right. So those are some key updates on GBP USD that we had highlighted from last week. But there's more to come, right? There's more coming up in the days and weeks ahead for this currency pair. So earlier today, we already had the jobless claims and the September unemployment. The unemployment numbers in the UK, the unemployment rate rather, is now at its highest since I believe early 2021. I had tweeted about it earlier, so fact check me on that there. Right, so that's done and dusted. Hence, the pound being the weakest G10 currency against the dollar today. But then also you've got coming up on November 13th, right? You've got GDP data. GDP, gross domestic product, that just measures how much the UK economy has grown, or its value, right? And whether it's grown, be it compared to the previous quarter or the second quarter or from a year ago. Okay, industrial production is a measure of how much UK manufacturers and factories, how much they produce in the month of September. Okay, so these are some key economic data we'll be looking at in 2 days from now. But then also here's another big one. Yeah, if you are thinking about potentially trading GBP USD, this is a very big announcement coming up later this month. It's the UK budget announcement. Right now, markets just do not have a good feeling about it, because the idea that the UK government may have to hike taxes on an economy where households and businesses and individuals, like individuals in the UK, they are already struggling. What more under the potential weight of even higher taxes. So while it may be good for the government, that means, higher taxes, they get more money and they can go about trying to shore up the UK economy by spending. But, it's not it doesn't come at a good time. No, certainly not at a time when the UK economy is doing splendidly well. Right, so it's something to keep an eye on. It's been keeping the pound weight down as well, beyond what we saw earlier today. Okay, so this is, and note that the date at the bottom of the slide was dated November 7th, because that's when I first showed this slide, just throwing in some updates here based on the numbers that we got from today. Okay. What else do we have here? So a reminder again, right? You can scan the QR code for your chance at your share of 25,000 USDT in rewards. For those of you watching on YouTube, thank you for joining us. The link, you can just click on the link in the description, and those on X, I've scattered that same QR code in a bigger format all across our thread as well. Just look for the official Bybit Learn X account. Okay, Bybit Learn, not the Bybit official account. Okay, and then coming back to GBP USD. I'm sorry if you saw that flash there for China H index. We'd spoken about it already from yesterday, right? It's something, an asset to keep an eye out but before we get to that, right now, here's something else for those of you who may have joined on our live streams last week and also noticed this. Check this out. So remember, I had mentioned that these currencies often have an inverse relationship with the stock index, the benchmark stock index for the country. Okay, in other words, usually when the British pound weakens, its stock markets tend to rise. Okay, it goes in opposite directions, inverse. You see the same thing with the Japanese yen. Again, this is not 100%. Yeah, it doesn't happen 100% of the time, tick for tick. No, but there is a strong enough relationship that has been around historically for many, many years now that you do see this relationship play out. So same thing for the Japanese yen. When the Japanese yen usually strengthens, then you usually see the Japanese stock index, the Nikkei 225, which you can also find on Bybit.com and on the Bybit app. All right, it tends to go in the opposite direction. Okay, so case in point, you've got the GBP USD that's erasing a lot of its declines right now, but it had weakened earlier today. And sure enough, you got the UK 100, which is the benchmark stock index for UK stocks, hitting a new record high. Okay, so there are opportunities across the markets, right? Even though we had mentioned earlier, crypto sentiment might be weak. People might be kind of staying off on the sidelines, but guess what? They are missing out on so many other opportunities across so many asset classes, and you can find many of these on the TradFi section within Bybit, right? So just hover up here. You can see not just your favorite crypto derivatives, but also on the TradFi, you've got metals, individual stocks like Apple, Tesla, Meta, the works, indices like the Nasdaq 100, S&P 500, and this one is what we call the UK 100, which tracks the FTSE 100. You may have heard or seen it, FTSE, right? That is basically think of it as a basket or a measure of the biggest stocks and companies that are listed in the UK. All right. Inverse relationship, UK 100 index, new record high, as the British pound was the worst performing G10 currency against the US dollar today. Okay. Yeah, so we have that. I tell you, we've got only about 3 minutes left. Let me try and see if there are any questions from you folks here. Again, feel free to just populate them in the chat, whether you're watching from YouTube or on X. Right. If not, we can just do a quick overview of, let me see. I guess I did kind of show you guys China H for a bit, right? Fine, let's revisit that. So give me 1 second here, folks. Let me just pull up the correct slide. Right, China H, fresh 4-year high, getting there. Well, because of the gains that we saw, particularly in the first half of yesterday, even though we had highlighted this on, again, November 7th, right? On Monday, it was the best performing stock index on within the Bybit universe in the first half, or for the most part of Monday, really. Today it's kind of slacked off a little bit, but yeah, again, plenty to look out for, not just a singles day and how Alibaba and JD.com, how they fared during this sales season, but also you got key earnings from these kind of companies. Again, these companies are some of the biggest members of that index, right? Again, that basket of stocks. Alibaba alone accounts for 10%, Tencent accounts for about 8.4%, JD.com about 2%. So how markets react to their earnings could actually impact how that index performs overall. So just a quick look at the charts with a few seconds that we have left, right? So there again, right now you've got this, once again, China H, 9,500, big round number resistance level. We saw it act as resistance in late October, potentially hitting resistance here again soon. We'll see if it conquers that. After that, you've got another look at for these wicks up here. That's around the 9.6 level. This one also, yeah, about 9.6. Yeah, thereabouts, right? So it's going to conquer this potential resistance, and then you got this week here. If it can climb above 9,770, then we could see a new 7-year high. Okay, so yeah, lots to keep an eye out for. I believe your main takeaway should be, there's so many opportunities across the markets, right? So we here at Bybit Learn, we are trying to help you identify some of these opportunities, and of course, there's plenty more. So feel free to keep checking out our social media, but also our websites. We've got new listings that we announce over there, and of course, if there's something in particular that you might be interested in, please do give us a shout out. You can always message us on X or drop a comment in one of these live streams, even after it's ended. If you're watching the replay now, thank you for that. And we'll try to respond to you as soon as we can. All right. So I think that's it for today's live stream. Thank you again so much for tuning in. And hopefully we'll see you again, same time, starting at 2 p.m. GMT on weekdays. And of course, look for that QR code that you can find on our X feed, or just click on the link in our YouTube description, and you could stand a chance at grabbing your share of 25,000 USDT and more in rewards. All right. Have a good evening.